Medicare supplement premiums are going up at a rate that we have never seen before. Some of them 15, 20, even 30% this year. You yourself may have been going to the mailbox recently, just typical day, getting your mail, just to open up a letter from your insurance company saying, hey, your premium's going up 15, 20%, and you are in sticker shock. Your supplements now cost you more than a brand new car. So I'm here to tell you what determines the rates, how they are adjusted over the years, as well as what your options are to lower your cost going forward. To start, let's dive into what determines a Medicare supplements price point. The first thing that is driving the price point, which is a huge factor, is their rating method. This could be either attained age or issue age or community rating. So what attained age is, when you buy a Medicare supplement, it starts out lower the younger you are. But these policies will see an annual increase for just getting older. They will also go up due to inflation on a yearly basis. You have issued age ratings, which premiums are based on the age when you buy, but they are generally higher at a younger age than the same age at an attained age rating. These policies typically do not go up based on just the fact that you're getting older, but they do still take a cost of living or an inflation adjustment every year. And the last thing is you have community rated, which is exactly what it sounds like. Everybody who buys this policy on a community rated policy pays the same price regardless of age. It will still increase over time, but your age isn't the factor when it comes to premium. It's truly just inflation adjustment. Your personal characteristics can even determine a Medicare supplements premium. Your age, your gender, tobacco use, what area you live in. You could get household discounts if there's more than one person in the same household on the same policy. And the eligibility timing. Did you do it during your initial enrollment period or did you do it later on? Those all could have factors in what a Medicare supplement offers you initially as a starting point. Then it may seem obvious, the plan type is also a factor in what determines the pricing point. Plans with richer benefits like Plan F or Plan G are going to be more expensive than plans with less benefits like Plan N, Plan K, Plan L. So which policy you buy determines how much you pay. Even carrier-specific philosophies can determine how much you pay. Things like what's their claims experience, what's their admin expenses, what's their profit targets, how conservative they are with their pricing, what is their strategy for new business, and how are they managing the current block they have. All of that can determine what you're going to pay when you start and how much it's going to go up over time. So you really got to look into the philosophy of even the carrier that you are buying into. There could be trend factors that are going to cause increases due to higher medical utilization on 1 year, just a general cost inflation, provider reimbursement. How much do they have to pay providers on reimbursements? Aging risk pools, adverse selection, and we'll get into all this a little bit more later, but that's just a quick example. And then this one just determines whether you're enrolling during your initial enrollment period or outside of any enrollment period. Underwriting can determine your price. If you're not guaranteed issue and you have to answer health questions, a carrier could look at those health questions and determine how much they want to offer a policy to you at, and it may be a higher rate than somebody who's guaranteed issue. So let's look at the annual rate increases we are currently seeing. Like I said earlier, a lot of big companies this year have taken 15, 20. One of them in my area is even taking a 30% increase. And there's a lot of factors that go into it. So I want to help you understand what these factors are that are causing these increases. The biggest driver when it comes to these increases is claims experience. Each year, an insurance carrier is going to project how much they're going to pay in claims. And if they ended up paying more, whether that is due to inflation costs or higher medical reimbursements to hospitals or contract negotiations where hospitals want more money than initially expected, they could cause your premiums to go up because they have to determine their premiums based on how much they paid out to stay solvent on a yearly basis. They can look at their block and look at the average claims per policyholder, the frequency of the claims, how severe those claims were. And the ratio they use is simplified as this. Their loss ratio, which determines their claims, is their claims paid over premiums collected. How much money did we pay out versus how much money did we intake? And they take that information back to their market strategy to look at, okay, we have to keep profit margins, admin expenses. How does this impact here, this loss ratio that we've incurred the past year, affect how much we have to make to keep solvent over here? Like I said earlier, medical trends or inflation on a yearly basis can determine how much your premiums are going up. Hospital costs are getting higher than they've ever been. Physician reimbursements, outpatient services, general healthcare inflation. I'm just going to look at the past 5 years, 6 years. We saw a trend, and it really was during COVID, where insurance companies paid out less than they had to and less than they needed to because utilization was at a low. Because during COVID, everything elective was getting canceled because it wasn't medically necessary. And only medically necessary procedures were getting completed. So all the electives, a lot of doctor's appointments, all this stuff that was causing insurance companies to pay out a ton of money stopped for pretty much 2019 till COVID was over. Once COVID ended, utilization picked back up. So carriers based their projection for those 3 years on that low utilization, gave you low increases, but now everything's on the rise. And now that we're getting back to normal, they're, in my opinion, playing catch up. That is a big factor. How much hospital cost and bills are costing us, and they're more than they were 5-6 years ago. It's just everything is. It's inflation. When they're determining your increase, they also have to look at the age of the block. How many people in the same plan as you in the same area, what they consider a block of people, how many of them are getting older? Because the older generation is going to have higher claims than the younger generation just by flat predictions. If they have a block that's mainly in the older side of things, they're going to want to protect their premiums a little bit more and give it a little bit more of a substantial increase. I also want to input here, when we're talking rate increases, we're talking percentages. Carriers will announce when they file, we're going to go up 15% on plan G or 10% on plan A. It is a percentage. So I just want to flatly say, when you're talking about a percentage is already on the higher end, your increase is going to be more substantial than that person who is on lesser of a premium. Let's say Alan, random name, is paying $100 a month, and Betty is paying $300 a month. And the policy says we're going to go up 15%. Alan's is only going to go up $15. Betty's is going to go up $45. So even on the older generation, if your premiums are higher, you're going to get more of an impact on these increases because your premium is higher and it's a percentage. Just to simplify how they are calculating their increases, they're taking what they're expecting their claims to be the next year and what premium they would have to charge to collect and stay solvent. And they typically almost always do it on a block level. That same example earlier, I said Betty and Alan are going to pay 15% increases. They're not saying Alan's going to go up $10 at flat rate and Betty is going to go up $5 or $20. They're not giving you different increases per individual. So they're not looking at one person who's healthy and say, hey, this guy's have very minimal claims. We're only going to raise him a little bit. But this person over here who has cancer, we're going to go up $100 or 50% on her versus 10. They're doing it the same for the entire block. That's what I'm doubling back to. If you're paying a higher premium versus somebody who's younger on a lower premium, your increase is going to be more substantial because it's all a percentage across the block. And obviously every carrier is going to have different increases based on their personal experience the past year. Everything's based on the law of large numbers. How many people do we have versus how much do we have to increase to not experience a loss? The more people on a block, you could safely predict you're going to see a less substantial increase than if there was only 10 or 20 people on the block. So I've seen it happen a couple times where you get a very small carrier with a very small block who is going to offer a Medicare supplement, and they're going to come in with a very super cheap rate to try to attract people. But because that block is smaller, their increases are more substantial than somebody who's maybe top 10, top 20, top 30 in the Fortune 500, because they have a larger book to spread cost between versus a smaller carrier, Joe Schmo's company down the road, who is offering and maybe has 50 people or 100 people on what they consider a block. The past 3 years has felt worse than normal. And I know I'm just recapping because we're having a higher utilization plus a higher medical inflation plus those policies that underpriced because of the lower utilization, they're correcting themselves. And honestly, a big factor is the rise in popularity of Medicare Advantage plans. Not only are Medicare supplements getting more expensive, but the popularity of Medicare Advantage plans does have an offhanded factor. Everybody who selects a Medicare Advantage plan to start, that's one less person in the Medicare supplement to spread costs between. So the popularity with Advantage plans is a correlating factor as to why your supplements are going up as well. But the biggest things is COVID ended, utilization rose in comparison, costs are getting more expensive, and those plans that underpriced because of the lower utilization, they're correcting. The first thing is you could try to switch to a different Medicare supplement. Now, unless you're in a special enrollment period or a state with maybe like the birthday rule, you may be subject to underwriting questions. So I've seen it with a couple of my clients. Their premiums went up, but they have some health history. Ohio's not a birthday rule state. They don't have a guaranteed issue. They really cannot change because no one's going to take them at a rate that's not more expensive than their current plan, even though their current plan is out of hand. So one option you have is switch to a different Medicare supplement within the same carrier. If you're on Plan G, you could call your carrier and see if they'll let you switch down to Plan N. Or if you're on Plan F, maybe you could go down to Plan G. But you still may be subject to underwriting questions. And they may say no. You have to look at your specific carrier to know if that's a possibility. The second option is you could try to switch to a Medicare supplement with a different carrier. All this is based upon your health history. If you're someone who doesn't have any major health issues, you have a good chance of being able to change. But if you're currently going through cancer or have COPD or congestive heart failure or something major, you may not be able to and you may be stuck. So going to a different Medicare supplement is one option. The other option is you can go to a Medicare Advantage plan. Whether this is a good option is going to be dependent on a lot of things. So just to recap, and I will drop a link to the video that I did on Medicare Advantage plans here. That way you can get the full scope. But just to give you a recap, Medicare Advantage plans, how they typically work is some plans are zero in premium, some plans have a premium, but you pay copays for what you use. And they all have max amount of pockets. So a plan might say you pay $10 if you go to your primary doctor. You pay $30 if you go to a specialist. If you go to get MRI, you'll pay $300. If you get chemo, you pay 20%, etc. They're all different, but they all have copays per service. But what they also all have is a maximum out of pocket. What a maximum out of pocket is they're going to calculate how much you pay for medical expenses in a calendar year. And if you hit that number, let's say it's $4,000, and you pay out medical expenses $4,000, you will not pay a dime past that. So that's what you got to analyze. What's your worst case scenario with an Advantage plan? I see it every year with my clients. I look through my Medicare supplement list, see what the pricing's at. And I got a lot of people who are paying more than that $4,000 or $3,800 or whatever the maximum that fits in our area. A lot of times their supplement premiums are more than that. So it's a pay me now or pay me later option. When you look at supplements, pay me now, you pay more premium per month, but less as you use it. Advantage plans, you're going to pay less premium per month, but you're going to pay co-pays as you use it. But if your medical max out of pocket is less than what you're currently paying for a Medicare supplement, it may be beneficial to change. This is why you have to talk to a local agent, or you could even call me and I can analyze, what area you're in, what plans are available, and is it a good option for you. There are other factors you have to look at with Advantage plans, which all depend on what area you live in. Network's a big thing. Each Advantage plan is going to have networks of doctors you can and can't see. In my area, Northeast Ohio, not a huge deal. The plans that we have here typically have majority, if not almost all the hospitals in the state and even some of the surrounding states in network. But if you're in an area of the country where there is very minimal network, it may not be a good option. It's why you have to talk to a professional. I don't like to use it as a selling point, but also Medicare Advantage plans do offer things that you're currently not getting on your supplement. Dental, vision, hearing are three big main driving factors. With your current supplement, if you're paying for a dental policy, that's just more money saved. So you really have to look at your situation. How much am I paying on the supplement? And with the substantial increases we are seeing, even if it's not this year, there's a good chance a year or two down the line that this is going to be your exact scenario where you are paying more than the max out of pocket on an Advantage plan. Now, I know what you're going to say. Zach, I've always heard that if I go to an Advantage plan, I'll never have the option to buy a Medicare supplement again. Kind of yes, kind of no. There is a rule established by the federal government that's called a Medicare Advantage trial right. And just so you know, I'm not making this up, I will drop the Medicare.gov link right here so you can pull it up and see that this is exactly true. What that is the government said if you join a Medicare Advantage plan for the first time, you've never been on one, you leave your supplement and you go to a Medicare Advantage plan for the first time, and you decide within 12 months that you want to go back to a Medicare supplement that you were on, you have a guaranteed issue right. You can't go back. So it is a 12-month, try it before you're fully committed. That is a protection point. I call it a trial period because it's called a trial right. It's like a trial period. You could get into an Advantage plan, try it for a year, see, do I like it? Do I not? And if you say it was not worth its weight in salt, you could go back to a Medicare supplement, guaranteed issue. Sometimes with these Medicare Advantage plans, the general high costs are going to be hospital stays as an inpatient, nursing home, cancer, dialysis. Because you're saving so much premium, if you can get past underwriting, you could buy what's called a hospital confinement indemnity policy as well. So you're minimizing how much you're saving, but you're lowering how much risk you have. What a hospital confinement indemnity policy does is if you go to the hospital, they're going to send you money and you use that money to pay the bill. They could do that for hospital. They could do that for nursing home. We could get ambulance covered. Cancer is another one too, a cancer policy. Sometimes you could buy a standalone cancer policy, or you could even do a benefit through the hospital confinement policy. But what that is if you get diagnosed with cancer, you get money to pay the bills. So those have a premium, but if you're looking how much you're paying, if you're looking at how much you pay for a Medicare supplement, if it's $300 a month and you're going down to zero, a hospital confinement policy, let's say if for you is going to cost $100, you're still saving $2,400 a year, but you're lowering how much you're going to pay out of pocket. And even though you're getting that money to pay for the hospital if you go there or the nursing home, to pay, even though you're getting that money to pay the bills, it still applies towards your medical max out of pocket. So there's a lot of angles here we can look at to possibly save money. You could switch to a Medicare supplement. You could move to an Advantage plan. And if it's your first time on it, you have the possibility to go back within 12 months. Now, the biggest factor with going back is you have to be in an enrollment period. So just to recap, the general enrollment period you're going to know is open enrollment, October 15th to December 7th. So what I would like to say is, if you're thinking of going that route, switch during open enrollment. Your Advantage plan will start January 1st. Try it for the year. If you don't like it, you could then go back in the next open enrollment to your supplement for January 1st of the following year. But also, they give you January, February, and March, if you're on an Advantage plan, to go back to original Medicare and a supplement. You're still going to have to file for the guaranteed trial right, but that is a possibility. And then there's special enrollments throughout the year if you move, stuff like that. But just the general two I want you to focus on is AEP, or annual enrollment period, October 15th to December 7th. MAOEP, Medicare Advantage open enrollment period, January 1st to March 31st, to go back to original Medicare with the drug plan. So you have many options to lower your cost. What options are available to you is going to depend on health history. You know, if you're unhealthy, you're not going to be able to go to a different Medicare supplement possibly. It might be your only options Medicare Advantage plan. But if you are healthy and do like the comfort of a Medicare supplement, maybe switching to a different carrier or maybe lowering your plan. There's that option. And then there's buying a Medicare Advantage plan. We're seeing higher cost increases than normal, and I don't think there's any sign that it's going to slow down. So I want you to take this information, look at your options, and decide, is staying, moving the best option for you? If you don't have anyone to talk to, my contact information is at the end of every one of these videos. You could email me, you could call me, and we can look at what's in your area. And if you're currently a client of ours, you have our number. You get your letters from us every year to check up during open enrollment. So if this is something you're interested in, make sure to write it down when you send the mail back to us. And that's for our current clients, but if you're not a client of ours and would like to be, reach out. I appreciate your time. Again, I'm going to drop the link to every other video explaining options in more details down below. Feel free to watch them. If you have any questions, reach out, and I'll see you in the next one. Thank you.